All right, this is going to be a quick review of the portfolio for the swing trade course for February 5th, 2015. There was the swing high earlier in January. Friday's sell-off, that was concern. Today was fear. We've sold off to about 7.5%. Tuesday morning will be panic. So 2 days of selling have eliminated about 40 days worth of gains. Note the MACD histogram, which gave us 3 confirmations of bulls on the way up, crossed over an extreme location up here, gave us a warning. So did the rollover of the 30, slope of the 30. So we had 5 days of warning to prepare for that kind of move. And risk Z was giving us the indications of being prepared for short, sharp, large intraday volatility spikes. And so we cleaned up today on the intraday trade. This is at risk, the VXX on the daily. This is when we get the long bias on the 29th of January. Our entry on the 29th of January at 28 and 0.62, $2 stop. We raised our stop loss at the gap up open, and then intraday we get 4 positions in. That initial trade is holding 8R. And tomorrow's going to be a big day. So pay attention to the indicators. Market condition change quickly. Risk Z and the volatility is a excellent way to stay on top of that. You can see an enormous number of signals on the auto framer. Just about everything is getting ready to fire. Everything moved more than 1 ATR today. That's why the max ATR risk to the auto framer is basically using the 1 ATR. All right, we're going to do a rapid fire of the portfolio. A lot of these are going to look similar because when the market collapses, all of the non-correlated elements all converge and go down together. So we'll just start at the top with Apple. We were short initial risk. Today was another big follow-through. Alcoa actually resisted that sell-off better than most, and our stop is still adjusted down to 49.37. Just got a negative bias on that day, so more to follow on Alcoa. Apple, our first short position, initial risk. Second position, it's almost at our third short position. We've tightened up our stop near the end of the day to 158. So we're 2 short positions in Apple, and the signal line is below the dotted line. More to follow. American Express, this is where we picked up our short orientation. So short here, second position here. On this big candle down, I added a third short right at 90, and then it reversed and it said that enough is enough, and cashed all 3 at 90. So that's a pretty good 2-day short. Boeing was one where we just had the stop, and this was the strongest symbol in the Dow. So we were long, cashed, bought the rebound, the buy on the dip, and then we had moved our stop to here, and then this got right at the open. It was basically a scratch on that second position, but not short because it's so strong. Caterpillar, we picked up that was a long side trade, re-entry, scratch, short initial risk, and covered towards the end of the day. Caterpillar is another one I didn't want to carry overnight because it has been so strong. Cisco got short today at the open, and we're just holding that one along with weakness in all of the tech, and it closed so poorly. I kept that one overnight, moved the stop down here to 39.40. CVX, the whole energy complex has been horrible. This was a huge one. You notice on the daily report that this was one of the largest movers on the stretch report, and so this is one that we piled on. So initially got short here, second position short on the collapse of that double bottom doji, third position short today, fourth position short on the bounce, got the recovery. I couldn't take it anymore. That was becoming such a large position, and because energy is vulnerable to sharp rebounds, I wanted to just lock in that gain. Diamonds had been the strongest signal. We didn't get the second position, cashed and shorted here on the stop and reverse, initial risk. Second position here when it broke through the RL270. Our stop is at basically 245. There will be a gap open tomorrow, and I'll be ready to preserve that if it starts to rebound at all. Devon Energy, initial short, second position, move the stop to 39.16. DuPont is one, the Dow DuPont. We've been studying that. I just, too late to take advantage of it. I should have trusted my instincts. But plenty of other opportunities. We didn't get the second position in EEM, so we ended up cashing here. Picked up a short bias here. Got short at the open. Today added a second position, closed weekly, moved our stop to here. There's going to be more pain overseas. We got short today on the euro dollar. Mexico, basically got 3 short positions in today. I'm going to move my stop down to the Bollinger Band mean. So the third position is slightly underwater, but the first two are excellent, and I think tomorrow's going to be a big day. I will add a third position here and a fourth position here. Brazil had been very strong. This is where we'd been long cashed. Picked up the short here at the open with the initial risk. Added a second position today. Moved the stop from here down to here. I will add a third position here. General Electric, long, fractional loss. Picked up the short today. I'll move the stop down to here halfway. Gold resisted the sell-off pretty well today. I have no position. Goldman, I've just been observing the weakness in the financials and missed the move down. Home Depot, this was 1 long, 2, 3. We scratched the third one and cashed everything at this point. Picked up the short Friday at the open. Second position here. At the close, I moved my stop down into here on 2 positions in Home Depot. I think that'll be a gap down. Home Depot, IBM, first short here, initial risk, added a second position today when it hit our target down at like Z-1. I'll add a third position here. ILF picked up the short today here. That had been the strongest sector. That's going to melt off along with the rest of the world, I think. Intel had been strong. Picked up a short here with the initial risk. That's the initial risk. Get that out of the way. Added a second position today. Moved our stop down to here. We'll add a third position underneath the RL270. IWM, first short with initial risk. Second position today at the open. Third position near the close. Move the stop down to break even on the third position. That'll be a big gap down. First short, initial risk. Second position, third position today. I need to put my stop loss in, excuse me. Johnson & Johnson. This was a big winner today. Short. I'm sorry. First short here with the initial risk. Second short when those two collapsed today. Third position short. Came all the way down to 122 and I couldn't take it anymore. It's been such a great company that I didn't want to hold that any longer. So 3 short positions cashed. Coca-Cola, the same thing. Only this one had 4 positions. First short here at the red line. Second tree line. So that was 4 shorts. And rebounded. And I couldn't take it. So exited at the close. I didn't want to carry so much overnight risk. McDonald's, same thing. First short, initial risk. Massive goodness on that one. Second position, third position, fourth position, and then exited on the bounce back up. It closed so strongly. This had the qualities later on of a bottoming tail. So that was value seekers, I believe. Merck, the long cashed, stopped and reversed here at the red line. Second position today, third position today. I pulled the stop down at the close to here, so the third position is still a little bit underwater, but I think that's, along with the weakness in healthcare, that's going to do fine. Microsoft next. Long, second position, fractional loss, stop and reverse short, second position, stop loss here. We'll add a third position underneath the RL270. Nike, first position short, second, move the stop at the close, add a third position here. Pfizer, like I said, these are all looking the same. That second position long failed, 1 hour loss, stop and reverse here. That's the initial risk. About $2. Oh man, short on an initial risk of about $1. So the first position is holding 8R. Second, third, fourth, fifth, and put the stop here. That's a large position. That was like one of the worst performers in the Dow over this whole period, and so if I was going to hold anything overnight with a large position, that's the one. And you notice how the MACD histogram is expanding to the downside well under the 0 line. We picked up this negative posture here right around the middle of January. The Qs are next. One long, didn't get the second one, cashed the first, short, initial risk, second position, move the stop near the close. Schlumberger, short, second short, I'm going to move my stop to here. Energy's been weak. There's nothing in silver. Spiders, cashed the long, short, initial risk, second, third, fourth, closed so poorly. In the aftermarket, it was trading around 258, so there's another $5 gap baked into the cake. So the stop near the close to lock that in. Treasuries finally started acting like a flight to quality today. I have no position in it, though. It's been trading weird. Travelers have been the best performer. So this was our long and got the close, or I mean at the open, cashed it. So there's a fractional win in there. I didn't want to short the strongest thing, but even there you can see how Travelers got smashed by the index weakness. Tesla got short today at the open, initial risk. Japan, the dollar short here, holding a nice gain so far. More to follow on that one, I think. So wide stop on the currency. USO initially short here when it broke below the low of the yesterday. initial risk at the top of the day. UTX, this was the big change in trading posture. This was the largest NDX loss compared to the previous 10-day range was really tight and strong. Long, 1 hour loss, short, second position short, and I need to move my stop down into here. VIX, massive goodness. I mean, this is when we picked up the long side bias, first position, second, third, fourth, move the stop to here. This was trading at 60, 60 in the after hours market. So that's a position earned intraday with intraday money. The swing position, it's a $20 stop now compared to where it was trading in the aftermarket. Long, cashed, stop and reverse short, initial risk, second position, closed poorly. That's our stop. Add a third one at 49.5 in Verizon. Walmart. First short, second, third. I'm going to move my stop down into here. So the third position is still underwater, but I think there'll be a gap. Win, first short, second short, third short. Our stop is now down here at 171. Next up is US Steel. Long, cashed, short, initial risk, second position, third position, and then started rebounding sharply. We cashed. XIV, this was trading at 10. I think it's done. I don't even know if they're going to honor these shorts. But if so, that'll be a massive gain along with the VXX gain. XLB materials short after a nice long run up. Initial position, second position at the open today. Third position. I'll add a fourth position here. I need to add my stop. Put the stop in here. Lock in the third short. Energy, 1, 2, 3 shorts, and then started rebounding off the 270, so I cashed. Financials, initial short today, second one, added the stop loss here at the close. I'll add a third position at 27.40. Industrials. The second position fired, scratched for a fractional. That was a stop and reverse. I'm sorry, that was this risk. Here's the stop and reverse on Friday with an initial risk. Second, third position, current stop. Technology, 1, 2 short, initial stop, add a third position at 63. Technology, first short, second, third. Oh, I think we just saw them. Sorry. XLP. Consumer staples. So we cashed the long. First short on Friday. Second one at the open. Third one. Move the stop to here. Add a fourth position at 53.90. Utilities. I'm still long. This little sell-off, it resisted pretty well. It's down 2%. The rest of the market was down 5%. I really want this one to work. Hunting yield. Healthcare. First short here. Second today when it cracked the 270. Third one. Closing poorly, so move the stop to here. Consumer discretionary. first, second, stop, add a third, add a fourth below the RL270. Metals and mining, this was Wednesday last week, initial short and the initial risk. At the close, it moved my stop down into here, just one position. And finally, ExxonMobil, first short, and got fractional loss out of it on that rebound, missed that gap, couldn't get back in until today when it cracked the 270. First entry, initial risk. Second one, it trailed all the way down to 76, and I let it come back $3 before I had to cash it to protect that entry. So ExxonMobil was a nice one day swing, excuse me. And I feel better about the money that I missed. So that's a quick look at the portfolio. Tomorrow is going to be madness at the open. I got to be ready to get all the stops in the market, and I'll be trying to adjust those. I think tomorrow's going to be my big profit day to start preserving the gains on those positions that were still open. I closed, I think, half the swing short positions so that I could have a manageable portfolio tomorrow and to reduce my angst with some of those have multiple size on them. Preparation was the key for today. The risk Z and the MACD histogram gave us plenty of insights and warnings. So this has been an example of core and turbo. That's Ken Long at Tortoise Capital. Keep your risk measured and your powder dry.